Crypto has created life-changing wealth, but it has also wiped out fortunes overnight. The difference? A plan. Most people treat crypto like a casino, throwing money at the latest hype, hoping for overnight riches. But the ones who actually build wealth, they follow a strategy. If you don't want to be the one panic selling at the bottom, you need to master the fundamentals. This is your blueprint for long-term success in crypto. No hype, no shortcuts, just smart investing. Let's begin.
This is the guy who bought Bitcoin at $1. Now one Bitcoin is worth $50,000. Should people buy Bitcoin right now?
Yes, because it's still cheap. You're still gonna get 100x off of Bitcoin.
When it comes to investing in crypto, there are two kinds of people. One who wins and others who lose. And the interesting bit is that the winners are the ones who take money from the losers. The main difference between the two groups is that one of them is financially literate, while the other group invests blindly. So, who are the winners and who are the losers? Let me explain. Imagine there are two investors, both starting with $1,000. Let's call them A and B. Investor A is the crypto bro you see everywhere. He doesn't understand much about the market or do his own research beforehand. Instead, he decides to follow the hype and put his money on the coins that are trending. Here, he faces two scenarios. One, he buys the coin at its peak, which is a bad investment, or he buys a trending altcoin which skyrockets over 5 times in less than a week, but instead of selling, he decides to hold on to it hoping for a bigger payout. The result? The coin crashes and loses over 90% value in a very short time. Next, he realizes that his investment is turning into a failed venture, so he panic sells his coins and blames the market. In the end, investor A is left with just a $100. Yikes.
I decided to buy Trump coin. I put in $1,000 and within 2 weeks, I lost half of it.
Now, there's investor B, who is a bit smart when it comes to managing his money. Instead of jumping on the bandwagon, he invests steadily and diversifies within crypto. Most importantly, he stays patient. Over time, the value of his assets starts to grow. He understands that while there is some luck involved, when trading in crypto, the most important thing is to stay disciplined. If there's a coin that does bad, instead of just blaming the market, they learn from their mistakes. Most beginners are like investor A, chasing hype, making emotional decisions, and ultimately losing money. But financial literacy changes everything. It gives you control over your investments so you don't fall for the same traps as most people. If you want to learn how to master the crypto market as well, here's how. We all have that one big regret. Why didn't I buy some Bitcoins when it was being memed at, right? While that train has left the station, you can still make a big name in the market with the right decisions. But for that, you need to build a solid foundation. So remember these 3 golden rules before you invest a single penny into crypto if you don't want to make costly mistakes. Rule number 1, never invest money you can't afford to lose. Now, this first rule pretty much speaks for itself, but you'd be surprised at how many people just straight up put their life savings into crypto, thinking that they'd turn into Warren Buffett overnight. What they don't understand is how volatile the crypto market is. One day, the coin is at an all-time high, and the next day it's so low that you might lose everything. These coins are influenced by laws or trends overnight, and you never really know when it's going to soar in price.
I bought 3 Bitcoins. In 2021, they hit $60,000, and I sat down with a friend who was all in on Bitcoin. He said by 2025, it'll be $500,000 a coin, and by 2030, it'll be $1 million a coin. Yeah. And so he was like, you are doing your kids a disservice if you don't buy each of them a coin. We have 3 kids, and so I went and bought each one of them. Then literally over the next 6 months, it dropped down to under 20. And so then I ended up selling it about 30.
You're one of them.
Yeah.
Take the example of the more recent cryptocurrency, the Trump coin. A president-backed coin sounds like easy money, right? Well, thousands of people thought so. And within a couple of weeks after the launch, it completely crashed and lost most of its value. What did the people who invested all of their assets into the coin do? Absolutely nothing. because that's the harsh reality of the crypto market. So if you are putting in money meant for rent, bills, or daily expenses, you're setting yourself up for failure. Remember to only invest what you can afford to leave untouched for years. Rule number 2, have an emergency fund. We just discussed how the value of a coin can go up and down at the most unexpected times, but the truth is sometimes the whole market can crash and the overall value falls off. Take the 2022 crash, for example. The hype around crypto was at its peak and everyone was making insane money off of it. But then, out of nowhere, the market crashed and Bitcoin was worth only a quarter of what it was just a little while ago.
You need an emergency savings account. That's right, a safety net to cover expenses in case life throws you a curveball. What do I mean? I'm talking about food, clothing, shelter, any essentials, cell phone, utility, any of the expenses you need to survive for at least 6 months.
Now, obviously, the bills don't stop. From house payments to bills, you need to make sure the payments are made on time. And in scenarios like these, the people who invest everything in the field are then left with 2 options: sell their coins for a super cheap price, or be forced to sell their personal assets at a loss when they need the cash the most. If you don't want to be one of them, make sure you have at least 3 to 6 months of living expenses saved, because markets do crash. It's not a question of if, but rather when. Rule number 3, manage your risk like a pro. Remember that old saying, don't put all of your eggs in the same basket. Well, much like the stock market, this rule applies to crypto as well. Going all in on one coin isn't a strategy, it's gambling. Diversification is the key. If you have your investment spread across several coins, your risk of a loss would be much lower. If one coin fails, then it won't be as damaging since the profits from the other coins would cover up the loss.
So I bought Robinhood stock at $32 a share.
Okay.
And it dropped as low as $7, and I doubled down and I bought more.
Now that you've built a pretty strong financial foundation, let's talk about investing the right way. For a successful crypto investment plan, you need to follow these tips. First up is to think long-term, not short-term. Let's be real. When most people jump into crypto, they're looking for that one magic coin that's going to be 100x overnight. But the truth is that if you want to build real wealth in crypto, you need a strategy that focuses on the long game. You should forget trying to time the market perfectly or jumping into the next time there's a wave of crypto being pushed. That's because the real winners in crypto aren't the ones chasing pumps. They're the ones who stick around, accumulate solid assets, and ride the long-term wave. Just like Rome, Bitcoin wasn't built in a day. It didn't just rise to over 100K overnight. Think about the guy who bought a pizza with 10,000 Bitcoins. Do you think he sleeps okay at night?
I just told people I wanted a pizza and I want to pay with Bitcoin. I didn't want a gift card. I didn't want some weird exchange. I wanted to give you Bitcoin and you give me pizza.
Today, that pizza would have been equal to almost $1 billion. So instead of pulling out fast, just invest and forget. Next up is structuring your portfolio. This means, where should you invest? We've already touched on why diversification is important, but there's still the question of where should you diversify. For crypto, there are 3 options: Bitcoin, altcoins, and stablecoins. Bitcoin itself is the backbone of the crypto market. It's been through multiple bear and bull cycles and remains the most resilient asset in the space. Many see it as a hedge against inflation and a long-term store of value, kind of like digital gold. If you're serious about crypto, Bitcoin should be a core part of your holdings. Altcoins are all the coins except for Bitcoin. These include coins like Ethereum and Litecoin. They can offer big opportunities, but also carry higher risks. The key? Focus on projects with real-world utility, strong teams, and long-term vision. Ethereum, Solana, and other well-established Layer 1 or Layer 2 projects are generally safer bets than meme coins or hype-driven tokens. Do your research. Don't just FOMO into whatever is trending. As for the stable coins, they act as your cash reserve and include USDT, USDC, or DAI, for example. Since crypto markets are volatile, Having some stable coins on hand lets you take advantage of dips without panic selling other assets.
I believe that in the next decade, crypto, blockchain will become the 12th sector of the economy. I've put 20% of our operating company's portfolio into crypto across 32 different positions. Polygon, Helium, Pollen, Ethereum, Bitcoin, not knowing which is going to survive because I don't know. But if you have enough diversification, you only need one or two to work.
And the last tip is consistent investing with dollar cost averaging, or DCA for short. You can't exactly predict what would be the perfect entry in the crypto space. Instead, you should be using a better method, DCA. What it basically means is that you invest a set amount at regular intervals, no matter what the price is. This way, you avoid making emotional decisions, reduce the impact of market volatility, and accumulate assets at a better average price over time. For example, instead of dumping $5,000 into Bitcoin all at once, you could invest $500 every month. This way, you're buying when the price is high and low, averaging out your cost over time.
Deal. Well, there's a lot of people like last year who learned about Dogecoin and then just put like $10,000 and bought it 80 cents, and then it crashed down to 3 cents. And they're like, wow, man, I'm donezo. It protects you from like that sort of stuff. As well as if you have conviction already, you can just keep acquiring more and more over time as it's going lower in price.
This is your blueprint for building wealth in crypto. No gambling, no hype, just smart investing. If this video helped you, tap the like button and subscribe for more insights. And tell me in the comments, what's your biggest challenge in crypto investing? Let's build wealth the right way. See you in the next one.